Before we take a look at our markets, quick look at the Asian markets. They're not doing too well. They've declined in early trade, and that's all on account of the negative handover that they got in from Wall Street. Remember, in the US, the 10-year fell to its lowest level since December 2017, further inverting the yield curve, which did invert sometime last week, stoking fears of recession or growth slowdown, as a result of which we saw the US markets not do too well, and the Asian markets not doing too well as well. So the Nikkei currently trading with a cut of about 1.75%. The Korean index also not doing too well. The Nikkei is further dented by the fact that we're seeing some safe haven buying on the yen, which is now strengthened to levels closer to 110%, shaved off the Korean markets. The Straits as well as the Taiwanese indices should come up for you as well. Both of them not trading well. In fact, the Straits just above the flat line, just around the flat line, while the Taiwanese index sitting with a 1/5% shaved off. In regards with that, the SGX Nifty indicating a slump as we open a cut of close to around 35 points, but will be very interesting to see how we take this, because there are a couple of triggers for us. The first one, that with growing global slowdown concerns, the oil prices, they've slipped about 1.5% overnight. Yesterday, we for our markets slipped about 100 points from the highs. So how much of that was preempted is something that we'll have to keep an eye out on. And finally, with the sort of dovish cues that are coming in from central banks across the world, how does that help the cause of flows which are coming in from the foreign markets to Indian markets? Yesterday too, we saw a big amount of buying in the cash market by the FIIs.
All right, then Asian markets, they are not looking good, taking cues from the US markets, where the stocks bounced off session lows but finished in the red. The 10-year yield hit its lowest level since 2017 as worries over a possible economic slowdown lingered. The Dow ended the day down 32 points, while the S&P 500 and Nasdaq ended 0.5% lower. Healthcare, utilities and energy were the worst performing sectors, falling more than 0.5% each. CNBC's Aditi Roy gets the wrap of all the action on Wall Street.
U.S. stocks finishing the day down, the Dow off 32 points, while the S&P sliding 13 and the Nasdaq down 48. Boeing unveiling software fixes for its top-selling 737 MAX jets, saying the updates, which include software changes and enhanced pilot training, will improve safety. All 737 MAX aircrafts have been grounded worldwide after the model was involved in 2 fatal crashes. Shares of Boeing ending the day higher. The fixes still need to get FAA approval. Meantime, UK Prime Minister Theresa May has reportedly announced she will step down as leader if her Brexit deal finally secures a majority in Parliament. This after UK lawmakers have rejected the withdrawal agreement twice already. This will allow a successor to take the lead on all future negotiations with the European Union. And Walgreens will sell CBD-infused creams, patches and sprays in about 1,500 U.S. stores. The cannabis-based products will be available for purchase in select states. The move follows CVS, which previously announced it would sell CBD-containing products. That's the action from the U.S. market. Back to you in Mumbai.
All right, on that note, let's get in some opinion on the U.S. markets and the Fed's rate trajectory given growth slowdown concerns. Listen in.
It's very near its target of 2%, but it's also just said that it's likely to tolerate inflation over 2%. And so from that point of view, the surprise dovishness of last week is really not a surprise. And maybe there is more dovish talk to come, because clearly German yields turning negative has spooked our bond market. And as pointed out earlier, we're in one of these zones where perception is not likely to become reality, but it could. But the point being is that this pursuit of inflation perhaps above target, there are a limited amount of tools the Fed has to allow that to happen, and the balance sheet stopping the roll-off early certainly is one of them.
All right, and across the Atlantic in Europe, it was a choppy day of trade across the European region after the European Central Bank President Mario Draghi did acknowledge that there are risks to the downside and which had increased for the economy, and pledged to intervene if economic conditions worsen. So dovish commentary coming in, growth fears making the European markets choppy. Individual stock that was in focus, and it's a developing story, Fiat Chrysler, that one was higher by about 2.7%, taking the Italian index higher as well, and that's primarily on account of merger news with regards to Renault going ahead and buying that company. But top of mind was Brexit, and on to some update coming in from there. It was an eventful day in the UK Parliament yesterday. The MPs debated for hours over various Brexit alternatives. but failed to agree on any majority option. Meanwhile, in a bid to convince the Conservative MPs, Theresa May actually offered to resign if the Tory MPs backed her Brexit deal. The PM said she knew that MPs did not want her to lead the next phase of Brexit negotiations, and she will not stand in the way of that.
Well, let's move on to the currency space. US dollar holds firm against basket of major currencies while the yen is steady against the greenback. In Europe, the pound slipped on uncertainty hanging over the Brexit process.
In the world of commodities, crude oil prices slip after data showed US crude inventories grew more than expected last week. However, disruptions to Venezuela's crude exports limited the losses.
All right, then let's take a quick break. We'll get you all the cues and news you need to know for trade this morning.